As of the market close on Friday, June 5, 2026 at 4 p.m. Eastern Time, Ondas Inc., trading under the ticker symbol ONDS on the Nasdaq, stood at exactly $10.43 per share. This marked a sharp intraday drop of 11.24% during the Friday session, a dramatic reversal after the stock experienced an aggressive multi-day rally earlier in the week. The sudden downside came as a shock to retail investors watching the ticker on their favorite investing sites, especially since the company had just reported a massive influx of bookings. The contrast between early week optimism and the weekend sell-off reveals a deeper structural tension within the company's financial health that most headline readers are completely missing right now. While the broader market was focused on the head-turning headline that Ondas secured over $110 million in total orders for the second quarter to date, the institutional desk was quietly reading the fine print of a massive resale filing and accelerating insider sales. This creates a fascinating setup for individual brokerage accounts and anyone engaged in self-investing. The superficial narrative says this is a fast-growing defense and critical infrastructure player experiencing typical small-cap volatility. The deeper reality, however, points to a management team that is aggressively capitalizing on short-term price spikes to liquidate shares, raising serious questions about near-term liquidity and execution risks. When you see the chairman and chief executive officer selling blocks of millions of shares during a major commercial ramp, it forces a massive reassessment of what that $457 million backlog actually means for bottom-line profitability. The common ground among growth stock pickers utilizing modern retail applications like the Robinhood app or Interactive Brokers trading platforms is that Ondas is an absolute steal at these valuation levels given its massive year-over-year revenue expansion. The prevailing belief on various online investing forums is that the company's recent $4.8 million contract with the United States Navy Southcom opens the floodgates for permanent government defense integration. Investors looking for automated portfolios or advanced investment help are increasingly seeing small-cap defense names pop up as high-risk, high-reward plays. But challenging this optimistic baseline is the reality of the company's cost structure. Ondas is burning cash at an accelerating rate to support its infrastructure, and its operating losses have expanded significantly alongside its revenue growth. The market expects a smooth transition from a high-tech incubator to a profitable defense contractor, but the numbers suggest that the company is trapped in an expensive cycle of scaling hardware that requires continuous dilution to stay afloat. Looking closely at the recent stock movement, the weekly volume tells a compelling story of institutional distribution disguised as retail accumulation. On Thursday, the stock rallied significantly, driven by enthusiasm surrounding expanded rail communications deployments and drone fleet integrations. Thousands of active retail traders on platforms like SoFi Invest and the Robinhood stock trading ecosystem piled into the momentum, pushing the stock towards its recent local highs. However, the Friday session saw a massive surge in volume on the sell side, wiping out the week's gains on heavy turnover that far exceeded the 30-day trailing average volume of 76.38 million shares. This classic whipsaw price action indicates that large institutional blocks were being unloaded into the retail buying pressure. When small caps experience this level of extreme daily swings, it often signals that professional market makers are re-hedging their positions ahead of anticipated regulatory filings or capital raises. Macroeconomic pressures are also playing a severe role in how Ondas is valued relative to its larger peers. In a persistent high interest rate environment, speculative growth companies that lack positive earnings per share are penalized heavily by the market. The cost of capital makes it incredibly difficult for a company with a negative cash flow profile to fund its working capital without significantly diluting existing shareholders. For investors managing their own portfolios through advanced tools like the Interactive Brokers platform or tracking small cap performance on the Fidelity trading platform, the macro environment requires a pivot toward companies with strong balance sheets. Ondas, despite its impressive order momentum, remains vulnerable to credit tightening, which explains why the stock experiences such violent negative reactions the moment any broader market rotation away from small caps begins. To understand how we arrived at this point, it is worth looking at what the company actually does and how its structural business model operates. Formerly known as Ondas Holdings Inc. before its official corporate name change to Ondas Inc. in January 2026, the company operates through two highly specialized segments, Ondas Networks and Ondas Autonomous Systems. The Networks division provides high-security, private wireless broadband solutions designed specifically for mission-critical industrial applications like freight rail, electric utilities, and oil and gas operations. Their core offering is the FullMax software-defined radio platform, which provides a secure wide-area network where standard cellular or commercial internet connections fail to meet industrial safety and reliability standards. This segment acts as the predictable, long-cycle foundation of the company, embedded deeply within heavy industries that change suppliers very infrequently. The second and more volatile side of the business is Ondas Autonomous Systems, which houses their high-profile drone and automated data collection entities, including Aerobotics and American Robotics. This division focuses on providing fully automated aerial drone platforms for security, site protection, and industrial data processing. A major focal point for recent defense bookings has been their counter-unmanned aircraft systems, featuring technologies like the Iron Drone Raider, which acts as a fully autonomous interceptor to neutralize hostile small drones without using explosives. They also market the Centrix platform, a cyber-focused detection and tracking system that intercepts unauthorized radio frequencies to mitigate drone threats in real time. This dual-segment structure allows Ondas to pitch itself simultaneously as a critical infrastructure telecom provider and a high-growth autonomous
defense asset. However, the historical financial reports paint a far more complicated picture than the corporate description suggests. If you look at the quarterly filings stretching across the past year, the structural mismatch between top-line expansion and bottom-line stability becomes incredibly clear. For the quarter ending in June 2025, revenue sat at a modest $6.27 million, which steadily grew to $10.10 million by September, and then took a massive leap to $30.10 million in December 2025. By the first quarter ending in March 2026, quarterly revenue hit an impressive $50.12 million. To the casual investor looking at a basic chart on an online investment platform, this looks like an ideal hockey stick growth trajectory. But the expectation of scale bringing profitability completely falls apart when you look at the corresponding expenses. As revenue climbed to $50.12 million in March 2026, the cost of revenue rose in tandem to $25.46 million, drastically compressing gross margins compared to their early software-centric projections. Simultaneously, research and development expenses scaled from $4.24 million in mid-2025 to $13.52 million by March 2026. The real kicker, though, is found in the selling, general, and administrative expenses, which skyrocketed to $53.81 million in the first quarter of 2026 alone. This caused total operating expenses to hit $92.79 million for the quarter, resulting in a massive operating loss. This structural reality shows that for every dollar of new product Ondas sells, it is currently spending significantly more on corporate overhead, marketing, and expansion, keeping positive net income entirely out of reach. Comment below how many shares of Ondas Inc you currently hold in your portfolio, and let me know if you are buying this recent dip or staying away entirely. This underlying financial strain is exactly why insider trading activity has become such a massive red flag for the market. Over the past 6 months, internal executives and board members have executed over 20 distinct open market transactions, and every single one of them has been a sale. Not a single insider has stepped up to purchase shares on the open market. The chairman and chief executive officer alone liquidated over 2.5 million shares, pulling tens of millions of dollars out of the company during a period when retail sentiment was incredibly high. When the individuals who run the operations choose to convert their equity into cash at a rapid pace, it creates an unavoidable friction between management's public commentary and their private financial actions. Retail traders using Robinhood investments or those checking their individual brokerage statements at night are left holding the volatility while insiders secure their profits. This brings us to the future outlook and the clear divergence between what the market expects to happen next and what reality will likely dictate. The optimistic case relies entirely on the conversion of the company's stated $457 million backlog into high-margin revenue over the next 12 to 18 months. Analysts who maintain a strong buy rating on the stock argue that as defense systems like the Optimus and Iron Drone Raider reach standard manufacturing scale, the heavy upfront capital expenses and deployment costs will drop precipitously, allowing the company to achieve positive EBITDA. They see the recent million-dollar defense wins as proof that Ondas is successfully penetrating the lucrative government procurement cycle, which could lead to long-term recurring software and maintenance agreements that are highly profitable. The alternative reality, which the market began pricing in during Friday's dramatic double-digit drop, is that the backlog may take far longer to materialize into actual cash receipts than the company's current runway allows. If working capital requirements continue to outpace cash generation, Ondas will be forced to file additional resale registrations, allowing early institutional backers and credit facilities to dump shares into the open market, capping any significant upside. Furthermore, the defense tech sector is becoming intensely competitive, with well-capitalized players vying for the exact same government contracts, meaning Ondas will have to maintain elevated research and development expenses just to keep its proprietary platforms relevant. For self-investing accounts and those managing their wealth through platforms like Fidelity Investments or SoFi Investing, analyzing a company like Ondas requires looking past the excitement of autonomous drone fleets and analyzing the strict mechanics of corporate cash flow. If the company can stabilize its administrative expenses and prove that its autonomous systems can be deployed without burning through its remaining liquidity, the current $10 price point might eventually look like an attractive entry window. But if the insider selling trends persist and the next quarterly report shows another widening of operating losses despite higher revenues, the stock faces a very real risk of breaking through its recent support levels. In summary, the central insights surrounding Ondas Inc highlight a profound mismatch between thematic market expectations and hard financial realities. The expectation was built on a series of phenomenal defense contract announcements and an expanding backlog that made the company look like a breakout star in the autonomous technology sector. The reality is defined by a heavy corporate cost structure, substantial operating losses, and an executive leadership team that has consistently sold stock rather than accumulating it. This tension explains the intense intraday volatility and the swift downward pressure observed during the final trading hours of the week. For any investor evaluating this asset across the major investing sites or through a dedicated individual brokerage account, understanding the specific balance between order volume and structural cash burn remains the absolute key to predicting where this ticker moves next.